Intel and AMD have been two of the worst performing semiconductor stocks in the last year. This as artificial intelligence is creating a surge in demand for semiconductors. But which one of these two is the better beaten down stock to buy? Intel stock is down 58% in the last year. AMD is down 18% in the last year. In this video, I'm going to compare the two, look at their revenue growth in recent years, their cash flows, and then I'm going to look at valuation measured by two different metrics, the forward price to earnings and the discounted cash flow valuation models I've created on AMD and Intel. Let's get started.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So I highlighted at the beginning of the video that these two stocks are under pressure. In the last year, Intel stock is down a whopping 58%. AMD is down 18%. This has been disappointing for stock market investors, to be sure. It's been disappointing for me because I've had these two stocks rated as a buy for this entire time. The whole year I've had them rated as a buy, and they're both down significantly. So I'm disappointed in their performance personally. But looking ahead, which one is the better investment? Let's first look at revenue over the last few years. So when I go back 10 years and look at revenue for these two, I see two different trends, and they are obviously noticeable, and that is AMD is growing revenue while Intel is losing revenue. And one of the reasons is that AMD is taking market share from Intel in both the personal computing industry and in data centers. Intel revenue $54 billion in the trailing 12-month period. That's down from around $80 billion at the peak. AMD, meanwhile, at $24.3 billion, has increased revenue very nicely. You might say, well, why is AMD's stock price down? I'll talk a little bit more about that when we talk about the cash flow from operations here. And you can see this trend working negatively for Intel and AMD. Cash flow from operations to sales on a trailing 12-month period are down for both of these semiconductor companies. They're at 18% for Intel, down from 45%, and it's at 9% for AMD, down from closer to 25%. So the cash flows are down for each of these two. AMD's prospects over these next 12 months look better than Intel. Demand for AMD's products are likely to increase. Their new MI300X chip for data centers optimized for artificial intelligence is a good product, and the early results are solid. It's the best product launch in AMD's history. However, when you compare it against what NVIDIA is offering, it's still not making a dent in NVIDIA's market share, which is estimated to be around 85%, 85 to 92% in the data center segment optimized for artificial intelligence. And part of the reason is it's not the physical product, it's the software. NVIDIA has a decades more advantage against AMD, Intel, and others in that data center space optimized for AI. They've been investing in that CUDA library and investing in the software, the ecosystem for developers, which makes it a lot more convenient for these companies to utilize NVIDIA's chips. Intel also has its Gaudi chip that's trying to compete in the space, and Intel is making less inroads than AMD is in that category. So far, these attempts at taking market share away from NVIDIA have not worked very well. And that's the primary disappointment from investors in these two companies, is their inability to stop NVIDIA from taking this entire market that's very lucrative and growing very quickly. Additionally, Intel's stock is under pressure because of the multi-billion-dollar investment it's made in manufacturing supply, in manufacturing capacity, in manufacturing capability, all of which it's costing the company tens of billions of dollars, and it had to pause the dividend as a result. AMD more than a decade ago, decided not to do what Intel is doing, and that is to have semiconductor design and semiconductor manufacturing in the same company. AMD shed that business and now only does semiconductor design, which investors prefer. In the last year or two, investors have shown a preference to companies that either do design or manufacturing, right? Taiwan Semiconductor only does manufacturing, and their stock price has done excellently. In fact, it's done so well that I made a video a couple of weeks ago saying that it's a good time for investors to take profits. Since I recommended that stock about a year and a half ago, it's tripled since I made that recommendation to buy Taiwan Semiconductor stock. That hasn't been the case for AMD and Intel. Their stock prices are down in that same amount of time. So investors are showing a preference clearly for companies that do one or the other. AMD does only one, Intel does both. Intel has been put in the penalty box for that, among other reasons as well. So now let's look at valuation. AMD is trading at a forward price to earnings of 17, while Intel is trading at a forward price to earnings of 11. So according to this metric, Intel is less expensive than AMD. When I look at my discounted cash flow models, AMD, my intrinsic value per share calculation is $180. The current market price is $120. So my AMD intrinsic value would suggest that AMD stock is about 50% undervalued at the current market price. My Intel intrinsic value calculation suggests that it's worth $36 per share, and its current market price is $20 per share. So Intel is trading at a bigger discount, more than a 50% discount. It's about a 75% discount from my back of imprecise math here. And so it's trading at a bigger discount than AMD. So both on the forward PE basis and the discounted cash flow valuation basis, Intel is trading at a lower valuation than AMD. However, that being said, if I had to pick between these two, and remember, I still have both of them rated as a buy, but if I had to pick only one, I would pick AMD. I think AMD, even though it might be a little bit more expensive than Intel, I think the risks for AMD are significantly lower than the risks for Intel, undergoing a major business restructuring, and now with a new incoming CEO, there's a lot of moving parts. It's riskier than AMD, considerably riskier than AMD, more than offsetting that lower price. So I would prefer AMD between these two. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.